February 27th, 2025. First thing I wanted to mention was that all of yesterday's sell-off still was going to need a second leg. I think I mentioned it in yesterday's video, but I thought that this entire sell-off was most likely going to need a second leg. My bar counter is off for some reason. I'll fix it this weekend or something, but I can just work with this for now. So on the open, we had consecutive bull bars and a large tail on the top of bar 2. Bar 3, I think, is the important bar. You could argue that 1 and 2 is a failed breakout, and we have maybe 3 legs up. 1, 2, 3. It's not that clean of 3 legs, but you could argue that 2 legs up and then a climactic breakout attempt above the bull channel, right? Bull channel breakout attempt. It's failing, and then bar 3, a big bear bar with a decently strong close. You know that 3 is going to be strong enough to need a second leg, and you know that this whole move from yesterday needs a second leg. If you just look at like a 15-minute chart, look at this whole move, right? There's some time frame, a 30-minute chart, where this is just consecutive strong bear bars closing near their lows. Look at this. 3 straight really strong bear bars closing near their lows. You know we're going to go lower. We might pull back first. That's the big thing, is that and Brad mentioned this to me the other day. When Al says exit below a bear bar, if you're buying bull closes and he says exit below a bear bar, Al can get back in the trade. He doesn't need to sit through the pullback because he's very capable of getting back in trades. People, who are just starting out are going to struggle a lot more as far as getting back into the trade. So it's better to sit through pullbacks if you're a newer trader. We might have some sort of measured move down, not quite that far. Maybe if the bodies, a little more than that. Maybe I'm interested in something. Hold on. You usually get a measured move of triangles. So whenever you get a triangle day, the market often tries to get a measured move. And a lot of times it's of either with the bodies, the high of the triangle and the low of the triangle, or with the tails, with the tails, the high and the low, or the bodies, the high close and the low close. And very occasionally it'll be right smack in the middle of those two. It's not really important to know that, but I just think that that's an interesting thing that the market does. So bar 3, you can sell the close of 3, expecting another leg down and expecting that we're going to get below the low of yesterday. Bar 4, disappointing. Doji bar, you can sell more on the close of 4, expecting us to go lower. You can sell the closes of 5 and 6, again, expecting us to get below yesterday's low, as we do on bar 7. 5, 6, and 7 is definitely going to need a second leg down. But if you're going to sell the closes down here, you have to keep in mind you're probably going to sit through a pretty deep pullback. The thing to think about is clarity. Once there's clarity in the market, when you're selling the close of 3, there's not a whole ton of clarity as to what's going to happen next. And then you get to catch the big move. It's decent probability, but the higher, in theory, the higher probability sell is to wait for consecutive closes or 3 or 4 closes, something like, this. Maybe a special exception because it's before bar 7, so I won't put this one in there, but wait for something like this. Wait for something like this. But when all of those things happen, what ends up happening is you end up getting some sort of pullback. You're usually going to get pullbacks when you're trying to sit through, or when you're basically, you're selling closes, looking to sit through trades, you're usually going to end up getting pullbacks. And the reason you end up getting pullbacks is because you're reaching a point of clarity. And points of clarity are where the market pulls back. Bar 10, I think bar 10, we needed a second leg, 9, 10, and 11. You could have bought the close. You could have bought the close of 11 as well. This is 11. This is 10. You could have bought the close of 10 or 11, expecting that even if we pull back, we're going to get a second leg up. And you can see we do get a pullback. 1, pullback, 2, pullback, 3. I thought of it just as 2 legs down, 1, pullback, 2. So just 2 legs down in my eyes. But you could look at it as 3 legs down as well. Not really a great sell below 17 or 18 because the bulls still have the directional probability. 8, 9, and 10, and 11 is likely going to get a second leg. And, some traders would argue that bar 14 is the second leg. And I'm not going to give away the stat because it's not my stat. It's Ali's stat. But the odds that the second leg is just 1 bar are very, very, very low in most cases. So odds are you're going to get at least a couple of bars and you're going to go above the bar 12 high or 11 high. When I think of a second leg, in my eyes, I'm thinking that we're probably going to get back above the bar 11 high. So 1 pullback, 2, 3, not really great to sell these closes in the 3rd leg down. when I think this has the directional probability of getting a second leg up. 19, 20, 21, 22. I honestly thought we would get more than this. I thought it was reasonable to be buying up here, expecting that we were going to get somewhere up into this area. But instead, we got a disappointing bar on 23. We have a trend line break. You could argue this is a bull move. And we have a trend line break here, and then a second leg up here, and then a reversal. So you could argue it's some sort of lower high major trend reversal. Hence, it's a credible swing trade below 23. Lower probability, but look what you get, right? If you're taking the short, you're not going to win, a whole bunch of the time, but you're only risking 9 points. And if you did a good job, maybe you made, 40 points, something like that. You can't really sell this close and scalp out right here. That's not really a good idea. If you sell the close, you get, what more do you want for follow through? If you sold this close and you scalped out, you gotta kind of ask yourself, what more could have the Bears done to keep you in? I mean, that's what you want to see. And you're taking a swing trade, right? You can't really take that trade for a scalp. So if that's not good enough follow through for you, then you should probably spend time thinking about what is good follow through for you and what you want it to look like. Pullback 25. Pullbacks, again, expected, especially after you get follow through. Point of clarity 23, 24. And then we have a continued sell off back down to the close to bar 30, and we're back around the close of bar 7. Again, if you sold the close of bar 7, you kind of signed up for this, so you probably had to put a stop, all the way above 2 or something, somewhere up in that area, and sell more all the way up. It's not a fun trade to take, but you did end up getting out at break even if you sold the close of 7 and were willing to scale in higher. You can't sell the close of 7 and exit above 9. That is a losing strategy. If you're going to sell down here, you either need to exit during bar 8, see the disappointment, and just get out at around break even, or you need to sell more, scale in, maybe scale in, and then use this opportunity to get out. But again, you have to ask yourself, if you can say you can do it, now you can see it, but what about when the market looks like this, right? What about when this is the chart in front of you and you've already scaled in and you need to scale in again? Are you going to have the mental will to scale in again right here? That's what you have to ask yourself. So leg 1, pull back. Leg 2, pull back. Leg 3. I made a couple mistakes today. I was trying to work on. I mentioned again. I talked to Brad, and he mentioned just work on scaling in, and it helps you learn in a certain way. And I sold, so I bought, I scaled in, and I ended up about break even. I wanted to get it up above here, so I was good with that entry. And I sold this close, and I got out somewhere down here, measured move. And my problem was I sold the leg 3, and I took a loss. And I wanted to buy here, but it just didn't quite meet the qualification of what I'm trying to do. But I think this is, best trade of the day. High probability that bars 35, 36, and 37 are going to get a second leg up after 3 legs down. Bears get 3 legs. The Bulls should get at least 2 legs. And I sold in here, and I ended up getting stopped out. And then I shorted again down here. No, I shorted here, and I got out somewhere down here. So I did end up losing today. We do, obviously, 35, 36, 37, going to get a second leg. Pullback 38, 39. Doji, disappointment on 40, but still a follow through bar. And then 41, 42. Outside up 41, and an inside bar 42, an IOI pattern. Doesn't really mean too much. Just expect a second leg. 43, follow through, but a large tail on the top. 45, I think, is a second leg. And then 47, sorry, I should be pointing these out. 43, large tail. 45, second leg. 47, third leg. So I think that's 3 legs up. You could argue we have 3 legs down, 1, 2, 3, but this might still need, what's stronger? That's the big thing. You got to ask yourself, what's stronger, this or this? The exception to that can be stuff on the open, because you can get really big reversals on the open. So sometimes the market, 50-50 chance the market's going to reverse on the open. So if you get a sell-off and then a big reversal, the market can just act like the sell-off never even happened if it occurs before bar 7 on the open. It's often because the market's trying to test magnets like the prior day's low on the open, so it's just a little bit less relevant. Something like this is really strong. So you can sell the close of 54 if you wanted to, or you could wait for 56, 57, and then you could sell closes 59, 60, 61. Again, if you're selling down here, you have to expect a pullback, and you can see we get a 2-legged correction. one pullback, and then essentially a two-legged correction, depending how you count it. And you could sell again below 66, expecting another leg down, maybe some sort of measured move, something like that. So, and then obviously, we get a spike and then pull back and then a channel down for the rest of the day. So what am I going to say? What's the thing that I'm going to say? Well, first off, let's look at overall context here. We've been in a bear channel for a while. And if we try to break out below the bear channel, it might fail. But I think that, the big thing to keep in mind is if we pull back tomorrow, this is still going to have control over the market in some sense, right? So let's say we get, a 20, 30, 40, 50%, whatever pullback depth we get tomorrow, just keep in mind, even if we get all the way up here, we're probably going to come back down to this price at some point. We're probably not just going to sell straight off. I've been mentioning the daily chart, and it's really strong. So I guess yesterday was a bull close if you include extended hours, but it's really strong. It could be a second leg trap. Tomorrow will be telling, right? If we get a big bear bar closing near its low tomorrow that looks like today, odds are we might go a lot lower. Right now, the bulls are hoping this is the low of the trading range right here, and we're going to bounce and start to go sideways. The bears want to get to, maybe here, the 11.4 high, and just, count the higher lows all the way down as far as bears go. Do I think this is the start of the move back to 5,000? I do not. But I do think there will be a move back to 5,000. I've been saying that for months. And simply because, well, let's look at the weekly chart, consecutive bear bars. The bears want really good follow through. And the monthly chart, simply, I do think there will be a move back to 5,000 because, look at how much time we spent oscillating around 4,000. Months, a year, a little over a year, right? We crossed over 4,000. And then how many months later? Crossed over 4,000, barely touched it, really. Micro gap here, which is really rare for such an important price point. And then how many months later was it before we tested again? 14 months later, we tested again. What about 3,000? We first touched 3,000 over here, and then it's, 11 months before it went far above that. We touched 4,000 over here, 11 months before we go, break away from that. Did we go back to 4,000? I don't know. I don't think so, but I don't know. So 5,000, how many months has it been? We basically went over it, briefly tested it, and now it's been 10, 11 months. So if it comes back down, 15, 18, whatever bars after and tests 5,000, that would not be surprising to me, simply because that's how markets act. But all right, that is basically